What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is September 16th of 2022. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, we've got to talk about the simple reality that winter is coming, not just for Bitcoin, not just Ethereum, and not just the broader altcoin market, but for stocks and asset markets as a whole. It is looking like we are entering into a potentially very dark phase for asset markets. And I understand there's already been a lot of pain, and it might sound like I'm stretching reality here, but if you guys stick around for any of my videos here, please make this one of those. We're going to talk a lot throughout this video, so if you want to play it on 1.5 times speed or 2 times speed so you can tolerate me, you can definitely do that through the gear icon down below. But please stay tuned until the end, and if you enjoy the video, drop a like, and let's go ahead and kick things off here. Now, I just want to go ahead and talk about the price charts here, because not only is there some macro updates that we need to talk about with, the successful ETH merge, which I want to give a huge congratulations for to the team that's been working on that. A lot of people said it couldn't be done, and a lot of people, of course, bashed Ethereum for taking ages to get this out, but they made sure to do it right, and the network transition worked incredibly smooth. So, big congrats to that. But we need to face the reality here. I'm not here to talk about the fundamentals of these technical upgrades. I'm here to talk about how the market's reacting to this, because it tells us everything we need to know about the broader macro picture and where prices are going, and why I remain extensively bearish at this current price range. So, I want to go ahead and I want to run through some of the major crypto charts here that we take a look at here, and just take a look here on the weekly time frame, okay? I'm going to go ahead and turn off any drawings here. You guys know our general TA here, but I just want to ask you guys real quick, just a little thought experiment. I think the best videos are ones where I talk back to you guys and stuff and just kind of go back and forth on these charts and ask you, what do you think? Take a look at this chart here, right? What do you think about Bitcoin's price chart right now in the weekly time frame? So we're taking a look back all the way here to April 2020 when we really started off the most recent bull market, and here from November going down, starting the new bear market. I gotta tell you all, this chart to me looks like it's ready to break down even further. But a lot of those people who are calling for 14, 17K, maybe even lower, are very much in the right camp. The probability of that is growingly likely here, because we didn't have any follow through from the bulls here during the relief rally, which we called here on the channel. And on top of that, we are not seeing any continuation when we retest these levels here. We're setting in lower highs here, which is signifying that there are not buyers at this range. At a minimum, they're going to wait here till we get a capitulation candle down towards 17,500 at a minimum. Right? So that alone already tells me that we're moving lower here. But on top of that, it's going to be a question of whether or not buyers can come in at that range. Now, the second chart we need to take a look at here, let's go ahead and turn off our drawings here, just simply look at the price chart. This is Ethereum on the weekly time frame here. Now, just to dive in here into the daily here, again, as we've talked about, if you guys remember, you can go back, watch the macro Monday. We stuck to our guns here that not only we were going to continue to face resistance here, but on top of that, that we're going to $1,250, $1,250 on Ethereum's price. And while we're not exactly there yet, a lot of people thought we were crazy back then, thinking, oh my God, Nick, you're bearish going into the merge. You're like really too cautionary on price. And again, I understand where a lot of people are coming from on this, guys. Like, it's hard not to get excited for some of these technical upgrades that have been delayed so much and people are so excited for, and are definitely cornerstone moments for Ethereum as a network and crypto as a whole. But take a look here at the price chart. We've gone down from 1780 here back on September 11th, down here in just a matter of 5 days, less than 5 days, down towards 1460. After the merge was into effect yesterday, we saw a 10% decline after an already 8% decline back here on September 13th when we got the CPI report. That does not seem like bullish euphoria to me. It sounds like exactly what many people have been calling for. It is a buy the hype, sell the news event. And that's exactly what this rally has been here for the past couple of months. Since back here in July, people have been buying at a higher pace Ethereum versus Bitcoin off of the upcoming merge event. It was the only real significant weighted amount of volume and asset value in the market that really appreciated during that time. Absorbed all that buy side liquidity, and now it looks incredibly exhausted here. Lower highs, anytime we get a bump up here within, for example, a 2-week time frame, within less than a week, we recoup those losses down 17.3% here in this week alone. And this is where it is incredibly important to understand that, if you're buying at a 50% dip, just how much more painful a 60% or 70% dip from all-time highs is, and just how far things can really go into real capitulation, and to spot what simple bear market relief rallies are, to take advantage of them like we did. We got cashed out here. I really don't want to speak like I know everything, guys. To be honest, we've made some wrong calls, but I gotta say for the past couple months we've been on a pretty good winning streak since here during the summer. We took advantage of that relief rally. We got out on Uni. We got out on a lot of positions, Ethereum, a whole range of cryptos, right when they were getting up in their territory here from late July to early August here. And sure, we didn't sell the absolute top. We're better off than a lot of people here because we took advantage of that relief rally here. And it's not too late. It's really not too late. I'm going to tell you all about that as we go throughout the video here. Take a look at Ethereum. I know we've got our drawings here, our general kind of short-term support and resistance bands, but just take off the drawings here and take a look at the weekly chart here. You don't even need to do any TA. You don't need to have any drawings here. What does this look like to you guys? A tall wick here on the candle here from last week and an 8.5% decline here for Ethereum. This looks exhausted. This is the period of time. Again, if we were really kicking off the next bull market, like a lot of people were calling for throughout June, if we're in the real capitulation channel here, we should essentially be seeing Ethereum taking this period of time, this news here, to break out to new relative highs that we haven't seen since as far back as 2018 against Bitcoin. We are not seeing that. We're seeing very similar topping activity to what we saw the last two times we came here, back in May of 2021 and in December of 2021. Essentially, previous buyers who bought in this range here, they're taking advantage of it. Traders are selling into the momentum, selling into the excitement. And it's not just in crypto. It's also in equities. And guys, I got to tell you, if crypto doesn't scare you here, I got to be honest with you all, someone who's a macro trader who got their original foundation trading in equity markets, I got to tell you all, the major indices on the weekly time frame look disastrous. I really don't want to be doom and gloom here, right? You guys know I'm an optimistic guy. I like to have fun, and there's going to be tons of opportunity that comes out of this to buy the dip, but I really want to share a big warning here that it is going to be much more painful before it gets easier here in the near term, right? We are probably going to have a couple of months of downward pressure here in the market. And this is just, take a look at the S&P 500 here. Again, we can turn off the drawings here. Consider the fact here, ignoring the fact, for that matter, that we've been hitting at resistance here multiple times on each relief rally. And on top of that, we didn't even come up here to the line that's generated from the two previous highs here. And on top of that, we've broken the critical potential support range here yet again, like we did back in June. Just take a look at that drawing here, right? The print of price here, down 5%, one of the worst weeks we've had since back in the summer of 2020. All right, so just think about it here, 5%. Take it to the monthly here. Let's go ahead and take another view. Does that look optimistic to you? And I need to ask another question here again as we zoom out. This is one of the best charts we can take a look at here. If you take a look back at history, just analyze the chart here, right? We've got two kind of things we need to be worried about. We've got secular bull markets, which we want to be long. We don't care about the dips, we buy them, right? There are many of these 20, 30% quote-unquote bear markets, or corrections, I like to call them, that happen over the last more than a decade here, up into 2021, from down here in 2009. Or are we starting to show the signs here of a full-scale recessionary bear market, where we come down and collapse from 1600 down to 700 like we did back here in 2008, 2009, or here in 2000 during the dot-com bubble down into 2003, where it is going to be multiple years where we're in a bear market, and where a lot of the names that we may be holding right now, whether they be altcoins, whether they be innovative tech stocks, right, that are burning through capital, are not generating revenue, or very speculative in nature, are going to vanish. If it is that you're leaning in the camp that it's going to be one of these, and you are currently overexposed to assets, you very well likely need to rethink how you're exposed. Now, if you're in companies like Apple, if you're in a lot of cash-rich companies, even if you get hit, you're probably not going to get hit that hard. Not as hard as some of the other people who may be way overexposed to speculative plays. And this is the really big problem here. I want to share a statistic that may hit home here. You know, over the last couple of years, we've seen a whole range of cryptocurrencies come out. We've got about over, I think last time I checked on CoinMarketCap, it's probably more now, over 15,000 cryptocurrencies. And that's just the ones that are listed on CoinMarketCap. There's probably more out there. But you catch my drift. Lots of assets being created, lots of artificial value being created with not much fundamental use case. If there aren't buyers there, the price could easily go to zero or slowly but steadily drag off to zero as people sell off and realize that there's no value. A very similar statistic that should really hit home is the dot-com bubble back in the 2000s. There were a lot of internet technology IPOs that came out during this period of time. And what if I told you guys that roughly around 95 to 98% all those IPOs that came out in that decade leading up to the peak of the dot-com bubble vanished in the bear market? They just completely disappeared. They never came back. Investors weren't recompensated for anything. They lost everything. Those who were left holding the bag of that equity. And sure, they were doing great during the bull market. Everything was easy. Everyone was a genius at the time. But when you start to head into the bear market, you need to be a passive skeptic here rather than a passive optimist within the market. Now, in the grander scheme of things, as you guys know, I'm an optimist in the long term, like the long picture. I think things will recover. I think we'll get back up. I think that there's going to be a lot of excitement to look forward to. But we need to wait till the value ranges that are going to give us the real opportunity here. Now, as we go throughout this, again, it's not just the S&P 500. Take a look at the Nasdaq here. Clear consistent resistance here. We had a clear deviation back here that we talked about here on the daily time frame, which was the clear signal here after the Jackson Hole speech that essentially the market was overextended and that we were going to continue the bear market here. Just take a look at that weekly chart. Does not look pretty. No support ranges of the ranges that we've been watching here have been able to be held here. Because of that, I got to remain bearish here. I got to remain bearish because on an extended time frame over the past couple of months, time and time again, we are setting in lower highs and lower lows. If we, at a minimum, come back here, test the support line here, boy, we have got a correction in the cards here over the next coming months, going into the winter. And if the VIX is telling you anything, the volatility index, which is inverse here, right, speaks to the volatility of the market, so it should be moving up when the market is going down. Take a look here, guys. Just in the past half a month here, or excuse me, past month here, we've gone from 19 points up to 28. And just the other day, volatility spiked right back up and is pressing up to new highs this morning. Now, I want to make it very clear. I'm not saying that things are going to happen overnight. I'm not saying that they're going to happen this week or tomorrow into the or today into the close of the market for the week. What I'm talking about is taking advantage of the time we have here while things are still relatively quiet and protecting yourself. If you don't have cash, right? If you don't have yourself hedged at this moment, if you can't afford for these positions to move lower than they are, you might be overexposed. And I got to be completely honest and humble with you guys here. Just being candid here, speaking where I get things wrong. To be honest, we were late to calling the bear market. I'll completely be honest with you guys on that. Back in May and stuff, we were still hopeful that 30K could hold. Again, we weren't 100% certain, but we were pretty certain that these ranges would hold to some degree. And as prices broke through, that's when we realized that any kind of relief we get in the market, like we got during the summer, we got to take advantage of it. Now, it's not just the prices that are telling me this. It's not just the lackluster momentum coming into events like the merge. We can take a look at CryptoQuant here, our data science partner here on the channel. If you guys want to check them out, definitely check out the link down below in the description. You guys can get a good discount signing up to the platform. But I want to signify something very important here. This is the kind of really cool insights you can get from CryptoQuant, which covers data science of the market. They have their quick take section here. They put out a really interesting article just 19 hours ago talking about, as the CPI numbers were released, just how much Bitcoin were moved into exchanges and how this started to weigh on price. You can see the reserves starting to spike up here. Large amount, tens of thousands of Bitcoin here, coming onto exchanges, having a direct correlation here with the weigh down on price. And that's why we've been seeing lower highs and lower lows ever since here. So this is, again, a key sign here that there are a lot of market participants, much more than those who want to come in and buy the market at these prices. There are a lot more who are willing to sell at these prices. people who've been in the game for a long time, people want to lock in profits, who see that the dollar is remaining incredibly strong right now, and is incredible demand here, mind you, during this period of time, as the Fed is in a very tight spot. We're going to talk about that a little bit later on and why this is going to lead to more capitulation. Now, I'm going to share something with you guys that usually is only accessible within the Dash reports, our newsletter here on the channel. You can always check out the link down below in the description, get 20% off annually. But here's one really interesting chart that we've shared. It's one of our many metrics here that we cover around technology companies. It is the Apple plus FANG index here. Now, this is one of the more simple ones here, but we have had this written about as far back since I think in our July or August newsletter. So again, we've been talking about this for the last couple months when everyone was getting euphoric, stock prices were ticking up, some people's bullish signals are starting to flip, right? People starting getting optimistic. But the big thing that we talk about is how market leaders play an incredibly significant role in determining when a bull market has started or is about to start, and also when it's about to end. Now, we know that Apple, Amazon, Facebook, or now Meta, Google, I'm thinking about all the technology companies, Microsoft, they all really outperformed the broader indices. They were what's known as market leaders, and they started to signify signals early on during the bear market back in 2008, way back then, that they were market leaders. They recovered losses much quicker. They held up better than the broader stock market. While other stocks were at their 52-week lows, a lot of these stocks started to push up their 52-week highs earlier, even when things weren't fully clear or optimistic yet. And that is the start of a new bull market. You find market leaders. Now, here's the catch. When you start to see these technology companies starting to perform weaker against the broader equity markets, that is your sign to run for the hills. Now, there have been some exceptions. Apple has held up incredibly well. It started to show signs of weakness here in the short term, but we're talking about the broader category of these technology companies. Meta, Amazon, Netflix, Google, a lot of these companies have been showing signs of weakness and have severely underperformed the broader equity markets over the past couple of months, as energy stocks and consumer cyclicals have done very well in inflationary environments. And now we've been, just as again one of our simpler charts here, just building an index here of Apple and the FANG stocks. We can see here we haven't touched this in months. And yet again, not only do we face resistance here, but we just got a 6.6% decline here. And I think we're very well on our way to retesting the line of support here, calling for a full 50% correction in the FANG stocks. I know it sounds bold. I know it sounds bearish. I know it sounds hawkish. But does this really seem so crazy now? Maybe it did when we were tracking up here, when everyone thought we were going to break out higher and that the bear market was over. But I think this is a pretty conservative ask here. We're just asking to come down to an ascending line of support, mind you, at a higher level than where we were back in March of 2020, which I think many people could argue we should have gone lower, but unfortunately the Fed injected the largest amount of money in history into the economy. So, essentially speaking, I think at a minimum we're coming down here. We could go off to worse levels. We could come down into a more equalized level here of support back in the past from 2018. But again, these technology companies, the innovation that they're putting out is lackluster. I mean, the recent Apple event, seeing how Facebook is just copying TikTok's model on Instagram and Facebook, really acting desperate here, not building anything innovative that's going to drive the next bull market, that's going to make them market leaders. And we've got a lot of ways to measure these stocks and prove that they are not leading against the broader equity markets. That's, again, the kind of stuff that you guys can get access to in the Dash report. But we've also got other things like ARK as well, which, again, was a market leader here. You know, Kathy Wood and the ARK Investment Fund. Again, while I think that they're great people, they're very interesting, I got to tell you all, I really think that they're getting caught up in their own doom loop, essentially. They are setting themselves up for their own destruction. Kathy Wood, alongside retail traders, have been buying the dip here. Now, I got to tell you all, unfortunately, the fact of the matter is, if you want to point towards history, you want to be an observer of history, retail investors and those who end up not succeeding in the long run, essentially speaking, they buy at all the wrong times, right? They buy when they think it's a good time to get in, usually during euphoric periods, and even during dips as well. So essentially speaking, it is only going to be when there is mass capitulation, when everyone's flushed out of the market, and institutions are getting their bids filled through that capitulation, through that deleveraging, through all that sell-side pressure, that we can find bear market bottoms. And I got to tell you all, we have still got a lot of retail buying. We've still got the Bed Bath & Beyond stock rallies, the pump and dumps essentially. Really, all these really nasty things that are going on in the market where people are just belligerently speculating. You've got random, crazy amounts of leveraged exposure and leverage trading exchanges on crypto through trading derivatives. You got a ton of people trading options that shouldn't be trading options at this point, hoping to make back and recoup previous losses. It's the same kind of capitulation waves. It's history rhyming to a degree. It doesn't always repeat, but it certainly rhymes here, has similarities to the past, and it is going to be the same game here. No matter what stocks are going down, which players are the market leaders, we are going to probably see a massive capitulation until everyone's flushed out, until things come back down to reality. And I really think that we're going to see something crazy like this for ARK and a lot of leading funds that are overexposed to these technology companies. And here's why. Technology over the last decade thrived as a sector, not only because it was just where a lot of the innovation was happening in our day-to-day lives, but on top of that, it's important to understand monetary policy and its effect on technology companies. Now, a lot of these tech companies who, Cathie Wood through the ARK Investment Fund, or even major technology companies had been acquiring, had been, been taken public to the market. Think about all your favorite technology companies out there outside of the big FANG stocks that are really cash rich, right? Most of them burn through capital. They need to raise venture capital, and then they eventually hit the public markets and they issue share, they dilute their company, pretty standard stuff in order to keep funding their operations and continuing to scale and grow. That worked for the last 12 years when capital was abundant, when technology innovation was real. There was excitement. The iPhone, advancements in laptops and computers and semiconductors that allowed incredible rates of growth and innovation and consumer convenience. It's why I'm here able to talk to you guys. I'm not bashing the innovation of the last decade. What I want to talk about is how the dynamics underlying that spurred this innovation are starting to change. And these are the signs of a cyclical bull market coming to an end and a cyclical bear market that can last 2 to 3 years kicking into effect. Unfortunately, so many investors that you guys might listen to, including myself, have really never lived through one of these events. Being completely humble here, we have never actually, well, maybe we've lived through it, but we weren't interested in markets during that period of time. And people don't know how to interact in these kind of situations, unfortunately, because they're so caught up with the idea that the Fed can always come to the rescue. But here's the catch. So all these technology companies over the last decade, and even crypto as well, have benefited from a generation of practically 0% interest rates for the vast majority of the last decade, which means that the cost to borrow was incredibly cheap. And more importantly, in the case of technology companies, venture capital was strong. It was tossing money left and right. It just wanted to own some assets. So not only could they hedge against inflation, but also catch the next big wave. They wanted to catch the next Apple, the next Netflix or Google, right? And a lot of these technology companies had great rises. A lot of them had great success stories, built some really cool things that helped us be more productive. And on top of that, made a lot of investors very rich. And they were able to do this because money was so cheap. It was abundant. They could easily raise capital. And they could always burn that capital in order to continue growing. It was all about scaling and growing. But now the federal funds rate is at 2.3%. So the base cost of capital is already much more expensive than where it's been for the majority of the last decade. And on top of that, it is going at a minimum to the Fed's target of 3.5%. I think that is undoubtable from the recent Jackson Hole speech and the recent CPI report. If anyone's doubting that now, I cannot help you guys. That is something that is practically set in stone at this point. And I would at a minimum take the Fed's word on this after Jerome Powell's recent speech. But on top of that, and I put a poll out on Twitter. If you guys don't follow me on Twitter, you can follow me at Nicholas_Merton. Put some tweets out there from time to time. But I put out a poll there, and I talked about the fact of whether or not people thought we're going to go above 3.5% to potentially up to 5%, or maybe even higher than 5% or more in order to reach our target rate here sometime in 2023 or 2024 to cool inflation. And I got to tell you guys, it is becoming growingly likely that at a minimum we are coming up here towards around this 4 to 5% range here, at a minimum, with what we can see now. Now, let's do a little thought experiment here. These technology companies which have been burning capital, have no path to profitability in the near future. A lot of these IPOs and technology companies, they might be very valuable. They might be building something really cool and exciting. And yes, it's not as ridiculous as it was during the dot-com bubble. Are they going to thrive in an environment where the cost of capital is multiple times higher than where it was before? Is it going to be easier to get loans? No, it's not going to be easier to get loans. Is it going to be easier to get venture capital? No, it's not going to be easier to get venture capital, which means they are going to have to dilute more stock, or on top of that, potentially file for bankruptcy or try to get privately acquired. A lot of these companies are not going to survive. They lived off this idea that you could just continue growing without a path to profitability. And while there are some technology companies that will come out of this just like Amazon and Google and will come out to thrive and be market leaders the next go around, which I'm definitely looking forward to, it's important to understand that those market leaders came out more than a decade later from the collapse of the dot-com bubble. It is important to understand, while there are success stories, there are a lot of people who do not thrive, who collapse during these periods of time. And that is not some doomsday, doom and gloom scenario. Again, you don't need to be some apocalypse kind of personality, essentially, to think that this can happen. This has happened time and time again during bubbles, which we were clearly in here when Dogecoin was leading the way, when we had all these euphoric meme stocks, GameStop, squeezing up to a $10 billion market cap, which is a dying retail chain. Now, this is really the nail in the coffin here. If you guys don't believe anything I said about the financing, all that, maybe you don't agree with me on that perspective, fine. Here's the final closing point. If we take a look here at the bond market, right? Right now, bonds are paying 30-year bonds, or 30-year Treasury notes for the United States, paying 3.5%. We just hit our highest level here since July of 2014, in over 8 years. Now, bond prices have started to decline here, right? So bonds themselves are offering a great discount price, paying out a great yield. Think of it similar to the interest you get in your bank account, right? You're getting yield on holding these IOU notes, these debt bonds, essentially from the federal government of the United States. So you're earning 3.5%. You get bonds at a great discount. And on top of that, these technology companies are dropping like a rock. Which one do you think are going to be buying here? I think very well there is a clear argument to be made that people are rushing to dollars, they're rushing to bonds, and more specifically U.S. Treasuries, for security. If we haven't seen big buy-side candles that are going to confirm a bear market bottom just yet, these various trends, we've had a couple months here of chop here and names like ARK. We've had chop here for the past couple months for the Nasdaq, for the S&P 500, for Ethereum and Bitcoin. Why haven't we seen anything that's going to carry us forward, or any clear signs that at least we want to push sideways for a while? I don't want to be too doom and gloom, guys, but it's important to be patient here about these opportunities. We will get those solid dollar cost average territory opportunities. We will be able to look for market leaders that are holding up well in the bear market, not just for stocks, but also for crypto as well, because it's the same dynamics here. They are markets. They do not change to a large degree. They operate in very similar fashion. They just come with different names, logos, and different asset classes that, again, change little to no dynamics of how these are actually going to function. They all benefit from excess money in the system, and they face turmoil during periods of less liquidity in the system. Now, last thing I want to talk to you guys about here is an important thing here, that it's important to have all the tools and have everything ready for when that time comes, when that opportunity comes. And it's not just going to be Bitcoin, Ethereum. There'll probably be some players who, again, are alternative plays out there in the market, the altcoin space. They're going to do well. They're going to be really looking exciting. They have really good chart setups and everything. And one of the best things you guys can do is prepare yourself with the proper tools in order for that time period, so you can buy the cryptos you want to buy and get in the positions you want and easily manage them. And one of those plays that I want to talk about is Block Wallet. Now, Block Wallet not only has its own unique token, but its big element here is that it is a cryptocurrency wallet that allows you to maintain privacy, high degrees of security, and easy user experience in order to interact with a variety of different layer 1 blockchain networks as well as layer 2s. Now I've got the extension right up here. It's a browser extension wallet that you can tap into. Now this may be very familiar to you guys if you've used, for example, the MetaMask wallet, or you might have used the Brave browser extension. But I want to go ahead and talk about some really interesting dynamics here. Not only do I generally prefer the user experience here at Block Wallet, but on top of that as well, there's a lot of key features here that you just simply can't find in other wallets. The first thing I want to emphasize here is its network's search engine here. Now, as many of you probably know, if you have, over the past bull market, used Binance Smart Chain, Avalanche, Optimism, Arbitrum, any kind of alternative layer 1s or layer 2s, you probably know how difficult it is to add new networks and to make sure you're inputting the right proper information so that everyone displays properly and that you can interact with these networks and their decentralized applications. What's really cool here is that they not only have a whole range of these networks already added here, a lot of the major popular ones like Polygon, Avalanche, Phantom, BNB, Arbitrum, and of course the Ethereum mainnet, but also you can add individual chains with just a search and a click of a button. For example, I can add Gnosis chain here. Just simply click on it, check it, add network, look over all the details, and click save. And just like that, I've just added another network here to my Block Wallet interface. So this is really cool, and I can just go ahead and hop from one network to another so that when I'm interacting with interfaces, I can not only see the gas price in the top right-hand corner, but on top of that, I can be ready to interact with a whole range of decentralized applications. And what's really cool, if you guys have been using MetaMask over the past year or so, you guys know that they charge a swap fee if you're doing swaps natively from within the app in order to keep the interface simple. And I'm not only going to get the best rates on the market, but on top of that as well, I'm going to not have to pay any swap fees to the Block Wallet producer. All I got to pay is the normal gas fees that I would do swapping from one crypto to another or using any kind of transactions on layer 1 blockchains. So using like a layer 2 network or layer 1 here within this interface is incredibly powerful, and it allows you to conveniently swap to your cryptocurrency of choice and be able to send transactions that allow for privacy and security, the likes of which you can never find with other traditional wallets like MetaMask. There are a whole range of data trackers that are on top of MetaMask wallets that you just simply don't expose yourself to with Block Wallet. Now we'll talk a little bit about more of this later on as we continue to cover Block Wallet here on the channel, but if you guys want to check out the link down below in the description. Let me know what your thoughts are in the comments down below. It's a really exciting wallet, and I'm really excited to see how it continues to grow over the coming months here. But definitely check it out. It's one of my preferred wallets here that I like to utilize, and I think you guys are going to find that it's very powerful for yourself as well. But to close things off here, guys, just to kind of signify the importance of this conversation, you guys know, if you've watched this channel long enough, we've been around since 2017 here on YouTube, and I've been investing as far back as 2011. I love crypto. I think crypto's got a very important place in the world in the coming future. Even a lot of the skeptics I follow have been talking about the sheer fact that, crypto essentially, even though it's going to be going through a very brutal wave, there's a lot of exciting innovation in DeFi. There is definitely some disruption here, and it is not to be ignored, but it is going to be a very pessimistic wave of pain that we have to face over these next few months before we can really start to see the next wave of innovation come. Until the times get good again, we are going to experience a lot more pain over the next few months, and possibly even up to a year or more from now. But what we're going to do here on the channel is cover the opportunities, because there is not only opportunities on the way down, but on top of that, there are going to be some opportunities that we can capture here in the next coming months in order to ride the wave back up. So stay tuned here on DataDash, guys. If you enjoyed the video, drop a like, consider subscribing if you haven't already, and share it with family or friends. It's one of the greatest ways you can support the channel here. But until the next video, everyone, thank you all so much for watching. I'll see you all in the next one. Take care, everyone.